What up, Raffle Nation? Welcome back to my channel. And today I want to talk about what I wish I knew about investing in the stock market.
Oh, this is my day. I'm ready to take it on, come what may.
So what I wish I knew about wealth management. And this comes from a question that somebody asked me in the comments below. If you're studying in university currently, what courses should you take? What should you be studying if you wanted to contribute to the development of Guyana? And my reply was wealth management. So what I'm going to do today is to explain to you some of the things I wish I knew about investing in the stock market and about wealth management when I actually started back in late 1990s when I invested in the New York Stock Exchange. And so I was in grad school at the time, and I thought I should be able to do well on the stock market because they had just come up with these online trading firms like SureTrade and so on. So I actually got an account on SureTrade and started trading individual stocks like Intel and Microsoft and so on. So what I'm going to describe is some of the things I learned from that experience, some of the things therefore I wish I knew before I traded on the stock market, like the stock market bubble that burst in around 99, 2000, and that almost killed my portfolio. And then what about the Guyana stock market? So guys, there are a lot of things that I wish I knew before I started trading on the New York Stock Exchange. I'm just going to tell you three of them. So these are the three things that I wish I knew before I started trading on the stock market. And the first one is, the first thing I wish I knew is how quickly the market turns. The market can turn on a dime. All right, so the stocks are rising one day, and next day they just plummet, and you can get burned. And so the second thing I learned and wish I knew is don't trade on margin. Don't borrow money to trade if you don't have the money to cover it, if you don't have the means to cover it. Or else you're going to have to be very, very rapid. If the market turns on a dime and you've borrowed money to trade, then you will end up in a deeper hole than if you hadn't borrowed money. So that's lesson number 2. And the third lesson is that these large institutional investors, like the hedge funds and the pension funds, they can move the market, and they actually have the say. And there's a lot of insider trading going on. There's a lot of systematic, periodic trading that moves large numbers of shares, and this can change the price. These large institutional investors can influence the market by simply making announcements in the media, on news, on the business channels, and they can move the market by simply releasing a statement. And if you know that the statement is coming, you can benefit from the movement of the market. But typically only the insiders, people who are on the inside, know that these large announcements are going to be made. Like for example, when Tesla CEO Elon Musk goes on Twitter and announces that they're going to have they're going to take the company private, and it moves the price of Tesla shares and so on. So that was the most important influence I discovered on the market, that if you are not a large institutional investor like a hedge fund or like a pension fund, then you really can't compete with the market as a small investor. So I got out of the stock market, the New York stock market, around 1999 or 2000, around the time of the dot-com bubble. And so I did not suffer from the later drastic crashes like in the 1998, 97, 98, sorry, like in the 2007, 2008 stock market crash. But I also didn't benefit from the run-up, right? So it's now all the way up at Dow 25,000. When I left the market, it was still under 7,000. And in fact, when I started trading, it was somewhere around Dow 3,500, Dow 4,000. So the Dow was pretty low. So the point is that you can make money. You can grow your wealth from investing in stocks, but you have to be patient. You can't be squeamish about market fluctuation. The market can turn on a dime, but you have to be able to hold your investments over the fluctuations. But you also have to know when to withdraw from the market, because buy and hold is not a strategy that works. There are times when you have to divest yourself of stocks. You have to sell the stocks and take a profit, because if not, you're going to ride the market all the way to the bottom and lose your money. Anyway, so those are the things I wish I knew before I started trading on the stock market. If you like this kind of content, leave a comment below. Tell me what you think about the Guyana Stock Exchange. Tell me what you think about, if you have experience investing in the stock market, what do you think about investing in Guyana? And later!